Hello everybody. So this video is entitled Undervalued Chinese Stocks. Now, this is a video that I find myself doing more often than I thought I would because these stocks remain stubbornly cheap and I don't know why. I know there's a stigma in US capital markets where these stocks are considered untouchable, but nonetheless, these valuations at some point need to come into play. Some of these stocks are just dirt cheap. And so the goal of this video, I've updated all of the valuations on my spreadsheet for all, how many do I have? 7. For all 7 Chinese stocks that I cover on my channel. I've updated the spreadsheet, and my goal is to find a gem. Is there a gem? Is there something that is just too cheap, that is very much acceptable as an investment? And of course, this is with the backdrop of many stocks many stocks have run. Many stocks are so expensive, right? Micron is the poster child of this trend, but so many stocks, unfortunately, have gotten very expensive, and China is none of that. There's no such thing as Chinese stocks that have gotten expensive. Many of them are actually trading as cheaply as they were 5 years ago. So let's just go ahead. Let's get started. I show you the valuation for each, and then just a few comments onto each stock and the stock price action. So the first stock in my spreadsheet is Luckin Coffee. So Luckin Coffee. Let me put this in the front. How do I do that? Gosh. Order, bring to front. Okay. Luckin Coffee, as you can see, it's actually 3x'd in 5 years, a little more, right? 350%, up 350%. So closer to a 4x actually. Pretty big deal, the performance, and this is because, of course, there was an accounting scandal which really drove the stock price down. But Luckin Coffee is the Starbucks of China, except it has many more stores than Starbucks, and it's going in a few places in Southeast Asia, like Singapore, for example, but it's also coming to the US, and they launched in New York City. Luckin Coffee does very cheap coffee. It's like $2 in the US to get it. And they are fully automated, app-driven. You can only order through the app. There is no counter. You can't order at the counter. You need to have the app. And the app, of course, is a very aggressive app with a lot of push notifications, a lot of deals, a lot of coupons, as is typical with a lot of Chinese apps, by the way. And you have a valuation which, if you were to compare it to Starbucks, we are in an entirely different territory. Luckin Coffee is trading an EV over GP over RG of 0.07. The rule of 40 is achieved at 41, and it's growing at 28% next 12 months predicted growth. So if I am strict on my criteria, I want 30% revenue growth. I want super cheap, perhaps less than 0.2 on EV over GP over RG, and I want to rule 40 above 40. If I'm super strict in my criteria, Luckin Coffee will be the only one that fits this criteria. And of course, in the US, we tend to think that Starbucks is the winner. But Starbucks makes me think a little bit of the Nike versus On Running, if that makes any sense. Starbucks is the incumbent. A lot of people are going for Starbucks lunch, and perhaps Luckin Coffee will not have a lot of success in the US, but Luckin Coffee could have success in Europe. Luckin Coffee could have success in a lot of places in Southeast Asia and in China. Luckin Coffee has become extremely popular. When I ever go to Asia again, it is part of my priority to try it. Or New York City. If I ever go to New York City again, I'll try it. But this is, I think, a very interesting stock, interesting company. Entirely different business model than Starbucks. And a small full footprint. It's all about in and out. Very tiny stores, tiny footprint. Customer picks up the order, spend $2, and then you're in and out, right? Volume. A lot of these Chinese companies operate with a lot of volume, low margins, super high volume. Anyways, moving on to BYD, the famous or infamous BYD. BYD started as a battery manufacturer, and now they do all sorts of cars, mostly EVs, right? But they have hybrids as well. Anyways, BYD, as you can see, in 5 years, BYD has not really moved that much. I mean, in 2021, we're at $10. and 92 cents. Now we're at $11.54. It did hit 20 in 2025, but now it's come back down. So BYD is kind of like it's Tesla without everything that matters at Tesla, right? So it's Tesla without robotaxi, it's Tesla without Optimus Bot, it's Tesla without full self-driving. It's really just the auto business. And if you're interested in just buying an auto business, BYD sure looks much more attractive than Tesla in the space. Now, I don't have my overvaluations, but if you're interested in that space, it would be interesting, well, important in my view, to compare BYD to NIO and BYD to XPeng. And out of the three, if I were to pick between BYD, NIO, and XPeng, I would pick XPeng, because XPeng is a Tesla copycat. It's such a good copy. It's not even funny. Down to the bot, right? Down to Optimus, and down to the CEO of XPeng, actually. So I would prefer XPeng if I were to pick, and the valuation, of course, is more favorable on a stock like XPeng or NIO than on a stock like BYD. But then again, BYD is a bigger company. You have a bigger base. You have a much bigger revenue, more established, etc., etc., etc. If I were to make a bet, of course, on Chinese cars versus rest of world, to me, in my view, the auto sector, it's going Chinese versus Tesla. That might be a hot take, might be an extreme take, but it's going to be the Chinese versus Tesla. It's pretty much what I think it's going to be. I don't think the Europeans have a shot. Toyota could survive. Toyota could make it, but even if you look at Toyota's leadership shake-up recently, and even Toyota is fearful. So the Chinese make very good cars. Let's not be mistaken about that. And they're cheap and very inexpensive. And they're taking Europe by storm. And they're taking Latin America by storm. They are very good at what they do, even though we'll never see that in the US. We don't see it in the US because they'll never make it to the US, these companies, right? But the world is more than just the US, as much as I love the US. I love the US, but still. Moving on to Tencent. So Tencent, you may wonder what Tencent does. You look at Tencent, you're like, why is Tencent too expensive? 0.57. Well, do you know what Tencent does, right? Tencent owns WeChat. WeChat is the WhatsApp of China, but it's not just WhatsApp. It's also, it's pretty much how you do everything in China. You need to have WeChat in China if you want to get anything done. And Tencent owns WeChat. They own the Chinese super app. And of course, if you look at the valuation, actually, if I were to put Facebook's valuation on EV over GP over RG, it's a valuation very similar to Facebook. So needless to say, I'm not that interested. I'd rather own the Facebook, right, than a Tencent. I think it's expensive. I think actually Tencent might be the only expensive Chinese stock. Now, Tencent, worth mentioning, they own a very large chunk of, is it Unreal Engine? No, it's not Unreal, it's the other one. They own like a big gaming engine. I think it's Unreal, yeah, Unreal Engine. They own half of that, and they also own a lot of video games and video game franchises. So you kind of had this odd, strange business where it's mostly WeChat, but they also have a huge video game division. And, when I hear video game, I hear disruption from AI. So to me, that's another reason to try to stay away from that one. I don't like that one. I wouldn't touch that one. Plus, WeChat, what anyways, I wouldn't touch it. Moving on to PinDuoDuo. So PinDuoDuo is I'll call PinDuoDuo interesting. Perhaps. And let me just get ahead of myself. There's 3 stocks in the spreadsheet that I find interesting. It's Luckin Coffee, PinDuoDuo, and Alibaba. And if I were to pick a winner, I'm going to tell you Alibaba is likely my winner if I were to pick. But PinDuoDuo is very interesting. So what is PinDuoDuo? PinDuoDuo in Chinese means friends shop fun. Friends shop fun. And they own a platform called Temu. Right, you've probably heard of that platform. I think it's more popular in Europe than it is in the US. But they own Temu, and actually, doing research for this video, updated the spreadsheet. I opened the Temu app on my phone, and I couldn't end up buying anything because it's really a game. They're really making shopping a game. Like, you can't get to the shopping cart without spinning the wheel 3 times and without having, fireworks on the app and all sorts of notifications and a cache. It's Uh, and the uniqueness of the Temu value proposition in China, the PinDuoDuo value proposition, this uniqueness I don't find anywhere else. It's very, very unique. It's not for me, but you have to imagine that a lot of people who are into, say, mobile gaming, well, you could be into mobile gaming and buy, whatever, like skins and swords and all sorts of stuff for your mobile game or leveling up in the mobile game. Or you could be on the shopping app and play on the PinDuoDuo app and feel like you're making a huge deal, feel like you're having a huge deal the whole time. But really, what is PinDuoDuo selling? PinDuoDuo is selling the fun of shopping. We are selling that experience of shopping for fun. And so, and it's entirely different from Amazon. Amazon one-click buy, you spend half a second on Amazon's website, boom, you spend $50, you order your item. PinDuoDuo is not like that. PinDuoDuo is for people who actually enjoy the process of browsing, shopping, and for that purpose, I would argue the app is pretty darn unique for that purpose. And that's also why the items that are sold by PinDuoDuo are usually very low quality, because they're not really selling you an item, right? PinDuoDuo is not selling an item. PinDuoDuo is selling a shopping experience that's like very, very fun. And who cares if a vacuum cleaner you bought for $5 is a refurbished vacuum cleaner from some factory that went out of business 5 years ago and it only works once or twice? Who cares? Very few people care about that, because they don't go to PinDuoDuo to buy the product. They go to PinDuoDuo to have fun shopping. And sure enough, if you're an efficient person and you're trying to shop fast, these apps are like the last spots you want to buy anything, right? Temu, Shein is a private counterpart, even I would argue perhaps a competitor, but more clothing oriented to PinDuoDuo. One last thing I'll say about Shein and PinDuoDuo, but Shein is not investable, but PinDuoDuo is Temu, right? The copy of Shein. One other thing I say is, so the U.S. really went after them for using the de minimis exemption of shipping straight from China to the U.S. at a 10% of the actual cost, because they're classified by the World Trade Organization. Anyways, I can't remember the name, but that international organization classifies them as an emerging nation. And of course, they removed the de minimis exemption in the U.S., which means that you are not, now you have to pay import duties on everything. And they got around that. How did they get around that? They got around that by building a bunch of warehouses in the U.S. and just paying the import tariff fees like any other company. So now what a company like PinDuoDuo does, and in Europe, by the way, they are building the same thing, they are doing the same thing. I know the EU is trying really hard to put like a small packages tax where they want to charge €2 or €3 per small package. PinDuoDuo is also getting around that in Europe by simply building your own warehouses, and you just fly planes full of stuff in one go. All in one go, you fly planes full of stuff, and you pay your import duties, and through that, you avoid the quote-unquote package fee. So anyways, companies are dynamic. If you remember PinDuoDuo back not too long ago, people were thinking they would be dead because of the end of the de minimis exemption. No, they're not. I find this stock quite interesting. They don't quite have the rule of 40. They're at 36. And they're more expensive than, say, Alibaba for growing, frankly, not that much faster. 14% versus 12%. So I still prefer Alibaba. I still prefer the leader, right? The absolute leader is what I still prefer. But anyways, this is just the way it is here. Moving on to Alibaba. So Alibaba is trading at a 0.03 in my spreadsheet. It is absolutely dirt cheap. I do not understand why Alibaba is this cheap. Alibaba is, let me see, just a second. There you go. Sorry about that. I don't feel like redoing the whole video, so I input these manually, and I had the market cap wrong. So, and again, I was wondering why Alibaba looked so cheap. No, Alibaba is not a 0.03. Alibaba is a 0.41. So Alibaba is expensive in my spreadsheet. Now PinDuoDuo looks much better than Alibaba. Let me just say that. So let me retract what I said about Alibaba. Alibaba is not cheap at a 0.41. I don't like it as much now. I definitely don't like it as much. Alibaba is the original e-commerce website. It's the OG. It's the first Chinese e-commerce website. At a 0.441, I much prefer a company like an Amazon, to be honest, compared to Alibaba at this point. Yeah, at this point, PinDuoDuo is looking much cheaper than Alibaba. Of course, Luckin Coffee, BYD also shining. You see, Chinese big tech is cheaper, but it's not that much cheaper, right? Tencent 0.57, that's pretty close to a Facebook. Alibaba 0.41, that's cheaper than an Amazon, but not that much cheaper. Not the level of cheapness I would expect relative to an Amazon. So Alibaba is a no. So I maintain what I said at the beginning of the spreadsheet. Luckin Coffee is the number one winner. Luckin Coffee is the winner of the spreadsheet, despite having 3x. Let's talk about BIDU. Baidu, of course, Baidu is the Chinese Google. Baidu is looking much cheaper than our Google, which is very, very expensive. But again, Baidu at 0.53, no, I don't find it very interesting, and it doesn't even reach full 40 either. So Baidu, in my view, is very much eliminated. And lastly, we have JD. JD also, JD is a company that is famed for its automation and automated warehouses, and they're all about automation. They're also launching a competitor to Shein/Temu in Europe. I listened to their call, actually, quite an interesting call a while back. Was it a few weeks ago? But no, the numbers just don't cut it for JD. To me, the growth is too small, too slow, and the rule of 40 is not there. So JD is not even worth my time. Even though if you look at JD, of course, if you look at JD or Alibaba, if you look at the chart, both of these e-commerce companies have actually halved, right? If you look at the chart, both of these e-commerce companies have halved, but it just doesn't look nearly as interesting. So anyways, let me conclude this video by telling you, to me, the winner of the Chinese stocks is Luckin Coffee. That's the winner that I see. In e-commerce specifically, that's PinDuoDuo. PinDuoDuo is my winner. And if you were to look at Chinese electric car vehicles, I don't have NIO and I don't have Xpeng on there, but if I had Xpeng or NIO would seem more attractive than BYD. So hopefully this helps you kind of figure out for yourself if you're interested in some Chinese stocks or not. And this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.